Good day, fellow investors. I must say, for starters, this video is sponsored by Only Fools and Horses Capital Management, which is one of the most renowned investment firms for more than 50 years from London, UK, most precisely Peckham. But okay, they say that with these stocks that we're going to discuss today, we are all going to be millionaires by this time next year. So stay tuned and click that like button if you enjoy this video. We're going to discuss the dangers of YouTube and this company VRYYF that has been exploding over YouTube and also with the stock price. YouTube is getting bigger and bigger, especially for investing. We have reached 100,000 subscribers, I thank you all, but that also brings its dangers. I want to really discuss the behind the scenes, what has started to happen on YouTube, which might lead to also the destruction of financial related videos on YouTube, because one day I think the SEC will come in and eliminate all financial channels if this persists. Let me show you. I get a dozen of emails like this. Everybody wants to do a sponsorship on YouTube. They want to promote their businesses. But I really wanted to discuss an email that I got, which is this one. So what will it take to do a 10-minute phone call with me? Got an email, and I would love to make you an offer working together. So we already work with several YouTubers on a consistent basis. This represents some of them. Don't know if you are subscribed to these channels. And the past clients include First Silver Majestic, gold mining stocks, and VRYYF, which is now the hot stock on YouTube related channels. And what they want a CEO interview, a vlog going over the opportunity, and then all even better if you do both of the two. And here you can see all these videos and they pay you for that. Then I have seen, okay, VRYYF, then I have just was online, and then I saw this, okay, VRYYF, vegan stock, also financial education, buying, and then just quickly skimmed at the comments, and then a lot of channels did, okay, we did a video, interview with the CEO, and if I look at VRYYF stock, everybody did a video on them, did an interview with the CEO, so a lot of comments on a really small stock, which is very interesting, and that's something I want to discuss in this video. VRYYF, they make a plant-based food technology company. It's not doing food, you eat technology. That's everybody has to be a technology company these days. And if we look at the stock price over the last month, really exploded. This is, I think, where Jeremy put out a video, but also remember this date, 17th of October, we'll discuss later in the comments when we analyze the company. Real explosion, but the company went public. Here there was an IPO launch at 25 cents. Then with very little money, you can, with a few million, you can push this stock up to $2. Then it crashed, then it lingered, and now it got really traction from YouTube and it went up. But these are all few $1 million volumes, daily volumes, and this shows the danger of investing on YouTube, because with a few $1 million, with hundreds of thousands of subscribers, you can easily move such a stock, which shows the danger. But let's, as the comment here says, let's see what the company really is, and let's not try to make a quick buck on it, but really analyze the business, and that's what I want to do, and then you can make your own decisions. So if you go to their investors page, the first interesting thing is that there is no data here. So there is the stock price and nothing else, no financials. You need to put your email address to download there, and then there are the announcements here and you can content them. That's it for an investor page. They have to make it better. But then I'm looking at the announcements and they make a new appointment of new chief financial officer. Don't know, here is the name something, but look at the experience, financial officer for Experian Holdings and Citizen Stash. I think this is cannabis, probably Aurora Cannabis. Here you go. And I did a few videos on cannabis stocks in 2018 and I was killed in the comments. Everybody was saying how stupid I am. Sven, you're really stupid. And I looked like a fool because stocks kept going up on no earnings, on just promises of growth, and you'll see later in the fundamentals what these people are buying. This is really ridiculous. The company now, Very Good Food, has a 200 million market capitalization on profits of 1.5 or revenues of 1.5 million. So that's price to sales of 100 and more, but it's growing, it's promising to be the next Beyond Meat, blah blah blah. It will be very interesting, so stay tuned and like this video if you enjoyed it. Of course, no need to tell you what happened to all these cannabis stocks, and I don't get a lot more comments to analyze them. But okay, let's look at this company now, what's going on there. So in order to see everything for the company, you need to go to SEDAR, which is the Canadian Financial Authority, and there you have all the releases, and we're going to go through the management discussion and last financial statement. Let's look at the financials of this company. And okay, sales over the quarter, 1 million higher, 4 times what it was over the previous quarter in 2019. Cost of sales, okay, what's that? 50%, 47%. That's good gross margin, 53%, higher than it was previously, so all good. And let's say economies of scale kick in. If the company can work better, be greater, be larger, should make even more money. But then these sales come from a boom from online sales. So COVID came in and they really pushed online sales, and this was door-to-door delivery to shops around Vancouver. So the expense for online sales went up, what is this, 200 something times. And if you look at what they spend on advertising, it should be then Facebook ads. I don't know what they do, how they target, but they actually don't make money selling their products. Plus there is here, where is it, selling costs, another 300,000. So if this is, I don't know, driving, delivering, which here is again very low, so different business model, but completely unprofitable business model, because if you have to spend this much money on sales, however, growth is there. Everything that matters in this market is growth. However, if you are unprofitable, you need to issue shares, you need to get more money to survive next month, because you are burning what? You are burning 1.5 million per quarter. And if you're burning 1.5 million, then you need to do better. And look at this, investor relations spending, 162,000. Corporate communication spending, 126,000. So we are already at, that's almost 300,000. And guess what? The sales were 1.1 million. They spent 300,000 of corporate on investor relations, corporate communication. Then professional fees go to 500,000 over the first 6 months of the year. This is really, plus the corporate, we are 800,000 of corporate and professional fees. So a lot of money from these operating expenses. Their amount to 2 million something. That's really a big number for 1 million in sales. And of course, every company can grow. If you spend 2 million, I can give me 2 million, I can give you 1.5 million back in 5 minutes. That's how it works, and you would grow, and then if you give me 5 million next month, I can give you 4 million back, and you would grow 4 times faster. So this is, okay, hoping on growth, being the next Beyond Meat. Okay, let's see, but what they are doing is already questionable. Let's look deeper into the management discussion and analysis. Current assets, so you're paying $200 million for the company given the market capitalization, but current assets are 3.8 million, The company, of course, the management gave 1.2 million, so the management has 1.2 million and they gave a loan to the company. Okay, it's better to be protected, no problem, but always keep in mind those related activities. Then this is really a big one. So on January 20, the company entered into a business loan and security agreement whereby it received a loan of $44,000, repayable over 113 installments of $504, due each business day commencing the effective date of the loan. The loan secured effective interest rate of 61.20%. We are struggling here to make 10% a year, and they take loans with 60%. Similarly, again, an agreement, so 17% of future sales given up. So with 2 million, that's what? $1.25 million, that's in 20-30 days. You give 170,000 in, and in 20-30 days, you get what? 5% per month. Those are huge interest rates and really crazy. So be sure to ask the management why are they paying such humongous interest rates. Then they went public, they did the IPO at a price of 25 cents per common share. 25 cents will later again show the stock price. It was never, not even close to 25 cents. It immediately went up. And that's also something very interesting to look. And then you have a lot of things you can read, enjoy the read, and then they issued more stocks, but this time at $1.30, plus they issued stocks and gave each stock a warrant of half a stock, half a warrant, if the stock price surpasses another level. Nevertheless, this is what the management gave for their shares, so 30 million shares. They paid 83,000 for that. That's 0.0002 cents per share, nothing. 83,000 for the company, which is now 30% of the company. Then they had the second share issuance, 14 cents per share. Then the IPO at 25 cents per share. There are conversion of the debentures, the loan that they gave, I think, that's 14 cents. And in average, all the money that they got in before the last issuance is at 10 cents per share. So you are paying now, whatever the price is, $3 for something that not too long ago people were getting for 10 cents a share. And I'll show you more about that from where this is coming. Okay, look at the balance sheet. We have shareholders' equity. They paid in 7.7 million. Deficit's 5.6, so really small shareholder equity. They say 3 million, but okay, doesn't matter here. So 7 million of what? 7 million, 3.5 million of cash, and the rest is property equipment, 377,000. So 200 million market capitalization for property of 377,000, and what is this? Accounts receivable 200,000, inventory 63,000. So less than half a million, less than a million, and market cap is 200 something million. This is really crazy. On sales, we already mentioned that actually from 2018 to 2019 sales declined, but operating expenses went through the roof. So no growth this year. They started really exploding when they switched to online business. Then, of course, the last offering, 8.5 million for a share at $1.3 plus a warrant for another half of a share. This is at 2. Okay, so as soon as the common share passes 2, you can get a warrant for 2 and then sell the stock for 3 or have it higher. So this is, I think it's Canaccord, and Canaccord was all around all the cannabis stocks that we discussed in 2018. This is how it's done. I don't know whether this is done normally or not, but this is how it's done. I just want to show you what's behind, and then you make your own decision. These are all the warrants. You can pause it. This, if you want to see, outstanding exercise price is 29 cents on average. So the stock price is a little bit higher. Stock options, okay, 26 cents. And then let's look at this. On July 10, 2020, the company issued 408,000 common shares. 408,000 common shares for a settlement of 102,000 owing to a vendor on July 10th. Let's look at the price on July 10th. The price of the stock on July 10th was $1.5, and they issued stocks at 25 cents. And this makes me wonder whether this is a fair price, a fair value, or is being manipulated with low volumes. That's something I can't understand, that's something we can't know, but this discrepancy here is really curious and to be looked into. We have to ask the CEO. Maybe we can do an interview. If they can come back to me, let's do that. That would be interesting, just for fun. Then another investor relation agreement for a term of just 90 days a quarter, 200,000. So they are spending 800,000 on an investor relation agreements. I hope it's not for YouTube videos. That should be paid from other sources if you're smart, not from your balance sheet. But okay. So very interesting what they are doing, but I've seen this already with other cannabis stocks. One thing is sure, the management will not lose money. If they are selling a little bit of stocks, they will easily on this market capitalization make back their investment, which is just 7 million. So they just need to sell a little bit of stocks, and with the volumes here of a few million per day, you can do that. Just you need to market the company, and this is something dangerous. We would love to discuss it further, but very interesting. The number of shares outstanding, and this is very important, this is what I want to talk. 93 million shares, founders have 30% of the company, and look at how this is done. 90 million shares, and then just with what? 1% of shares, 2% of shares, you can push the stock price higher, which leads to a huge market capitalization. This is Canadian dollars. So a company that has a few million in assets, a few million in revenues, is not profitable, reaches a market cap of 267 million Canadian dollars in this case, and it's going up. How are they doing that? Well, let's go through a little Canadian stock offering. Let's make a business IPO, let's call it ticker SVEN or Canadian Stock Exchange, whatever. Let's sell fast-growing online courses, business and tech. We will use machine learning. We'll listen to your comments and see what best to offer. Let's say we start the business with zero equity, all digital, a few thousands, okay, and we issue stocks to ourselves at 0 or 0.005 cents, 75 millions of those. So just me, and let's say you are a partner there. Then we issue to some friends and family, Fool's friends and family, approximately 15 millions of stocks at 15 cents. They pay in 2.25 million. We use this to market, to go public. The valuation now is already at 13.5 million, based on the zero value stocks that we started it. But this is the valuation. We go further, we go public, we tell our friends, we grow fastly, earnings will come. That doesn't matter that we are burning a lot of money, we promote to others, we do YouTube videos, we are guests everywhere, we tell people how fast we are growing and how we are the next beyond education or whatever, and we push the stock price higher, or with our own money. If we tell our friends not to sell and we don't sell, then everybody who wants the stock needs to pay a little bit more. We buy more perhaps on the market, or we have more friends, and we get quickly to a valuation of 180 million. This is how it's done. When you have such a valuation, then sales, where? Who cares about sales? But you can issue more shares, especially if you have visibility, YouTube visibility, interest, and you're growing fast, and issue more shares, you invest more, you do more online courses, you grow, and even reaching a 369.04 billion valuation with such a system is possible, and we have seen it happened over the last 10 years. So I'm not saying the company, in this case Very Good Food, is bad. It can go to 10, 20, 50 billion on valuation for sure within the market we are living, if they just keep doing what they are doing, issuing more shares, growing, gaining market share, etc., etc. It's possible. I'm not saying it's not possible. I'm just discussing the idea. The higher the stock price is, the smaller is the dilution, the more money they can get. The owners gave a loan of 1.2 million to the company, so they want to get that money out as soon as possible. Then also there are options vesting to anybody, everybody, and very interesting, options were vesting at 17th of October, and I'm getting sick of talking even about this. Sorry, I could looked at the details last night, but okay. Nevertheless, let's talk about the most important thing. So please read always the prospectus and see whether, when reading the prospectus, and you can find it on the investing relation page, so please go to Cedar to get to the prospectus. And then you can find all the documents there, the earnings, how it's going, what the plans, what they're doing, what's the dilution, how a company with 2 million in assets, 3 million in assets can have a market capitalization of 90 million. But everything is about growth, and this is also something, I don't know who are the investors. With a few million you can manipulate easily this stock, and if someone like Jeremy buys this stock, then it's of course with his following, which is 500,000 subscribers of YouTube, then the push is even higher there. And with very small float, because we don't know who the owners are, is that a deal or not? But this reminds me a lot of what has been going on with the cannabis industry, with the gold industry. And when I get those emails, Sven, can we promote on this channel? It's just a warning that I wanted to give you, to think with your head, look at the prospectus, read the prospectus, not the manual in this case. And the story behind this is that the next this or that, if you look to Peter Lynch, the one stock that you must never invest in is the next this or that. In this case, this is the next Beyond Meat. There are so many options, so many warrants. The stock price was 25 cents 6 months ago, now it's $3. So, okay, there was growth, online demand, they are growing and promising a lot of things, but without profitability. And this is also the market. The market is not profitable, so nobody cares about profitability, just growth, 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 growth. And this reminds me of so many stories from the past. We can talk all day. So my message is, please be careful, be careful. Market cap 200, 300 million. They can grow more, they can grow, they can expand. If they just dilute their business, if they find 10 million, 20 million, they can build 10 new facilities and increase sales 10 times over the next year, 2 years, really become a growth stock, and then go even higher and higher. And there are companies that have completely taken over the sector by market capitalization, also starting like this, promising, 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 not caring about profitability. Not going to mention names because then I'm dead in the comments. But maybe they will make it, maybe not, who knows. This is the environment we are living in. And then really, if you want to put your money in something like this, understand the incentive behind, which is that some people, like it was with cannabis stocks, will surely 100% make money on this because they bought those shares for 25 cents. There hasn't been more than 10 million invested in the company, and now the market cap, if you buy it, is 260 million. So of course it's tech stocks. Sven doesn't understand anything about tech stocks, but my message is simply be very, very careful. And I wanted to do this video because of this email and the dozens of email I'm getting out like this day by day by day. So, and you always have to ask, what's the incentive of the other person whenever you deal with someone? You're dealing with me, you're watching this video, so what's the incentive of Sven Karlin? Well, Sven Karlin started YouTube channel in 2017, just for fun, hoping to make something out of it. Then there was a lot of requests for my research platform, and now I have a free course that I'm happy to educate people. I have a book here on the side also, and I also have a research platform where I research stocks. And if we look at the research platform, this is what I do. I'm looking for growth businesses with positive trends, emerging markets a lot, commodities. And if somebody takes value from me working full-time on this for $1 a day, this is with VAT, if you're not from Europe, no VAT, then that's what I do, that's my incentive. So you can check what I do, you can read the curriculum. Over October, the end of now, finished copper sector analysis, full copper sector analysis has been made. I looked at every copper stock, made an analysis over the next 5-10 years, when is the best time to invest, and you can see here all the stocks that I follow, copper stocks now, the latest that we did, etc, etc, etc. But then again, some very nice incentive. What we make on this video with YouTube ads goes all to charity. We have donated 51,000 euro, that's about what, $55,000. Thanks to you watching. We have this Right to Lou Nepal school charity projects. We already did 4. We helped local daycares, and that's something I wish to continue, and you can read more about that on my blog. So that's my incentive, so that you know who you are dealing with. I'm having fun doing YouTube videos, and that's it. I thank my sponsors, Only Fools and Horses. Let me know in the comments below, what do you think about this? How do you feel about this? And we go on from this normal investing as always. We can go into the details. I could spend years talking about the mumbo jumbo in the financial statements, but no need to ruin your weekend. Thank you, and I'll see you in the next video.